Good morning, everybody. We're really excited to have a conversation today, sharing with everyone a little bit about what we've been doing here in the United States to build towards a more inclusive financial system, and hear how that compares with some trends happening in other countries around the world. My name is Kate Griffin. I'm the Director of Programs at the Aspen Institute Financial Security Program, and I'll be moderating today's discussion. I am delighted to be joined by several panelists who have been really useful and enlightening mentors and guides for us in this journey. I'll be joined by Mac Wallace, the Policy Advisor at the Aspen Institute, Delicia Hand, the Director of Financial Fairness at Consumer Reports, and Nancy Wijaya, who is a Policy Advisor at the UN SGSA for Inclusive Finance. Later in our conversation, we will also have a brief fireside chat with Susanna Fritzberg, who is Deputy Assistant Secretary at the Treasury Department, and has been a real champion of our work in building a more inclusive financial system. So what does that mean even? I'm sure that many of you have been steeped in this work for years, and this week has been a lot of conversations about the future of financial inclusion. And we've been doing some work here at the Aspen Institute to really lay a marker down on what a more inclusive financial system looks like and how we define that. And principally, it means that all people have access to, as a first sort of set of issues to look at, but can actively use and ultimately benefit from the full suite of financial services that are needed to achieve financial stability, resilience, and ultimately build wealth for themselves and their communities. And you'll see in what we discussed today that kind of definition that both encompasses that full suite of financial services, from banking and checking and short-term savings to longer-term investment, credit products of all types, insurance, and one that really has a deep root in thinking about outcomes for families, has been highly instructive in how we've gone about the work here in the United States, and what we'll be building to. And we are really focused on what is the role of the financial system in delivering outcomes for families, while recognizing that there are other systems at play when it comes to the quality of jobs and the labor market and the macroeconomy that are also influencing outcomes for families, but really helping to focus the key stakeholders here on the role of the financial system in that work. The work that we've been doing here in the United States also has been focused on the development of a coordinated national strategy. Taking inspiration from many other countries around the world that have these national strategies in place, we believe that it is critically important for us to look at the array of actors across federal government, different government agencies, regulatory bodies at the state and federal level, private industry, the range of financial sector providers, banks, credit unions, community development, financial institutions, nonprofits who are service providers, researchers, consumer advocates, and really identify what is a set of priorities that we can collectively work towards as a group of stakeholders trying to build a more inclusive system. And it's our hope that the creation and building of that kind of national strategy will help us to sort of make really important leaps forward in terms of outcomes for people's lives. So with that, to tell us a little bit more about some of the work that we've been doing here in the United States, and particularly when it comes to defining what we mean by an inclusive financial system, and in particular, if we are to set a national strategy, what should be a North Star and a set of guiding metrics that we would use to measure our progress towards a more inclusive financial system. I want to invite Mac Wallace to share a little bit about that framework that we've been using and where we're landing in terms of how to actually measure the inclusiveness, if you will, of our financial system. Mac?
Yeah, thank you for that introduction, Kate. And good morning, good afternoon, good evening from around the world. My name is Mac. As Kate shared, I'm a fellow and advisor with the Aspen Institute focused on inclusive financial systems. And what I'd like to do is share a metrics dashboard to answer the question, just how is the US financial system performing as it relates to inclusion? So as Kate shared, we define an inclusive financial system as one where all people can access, use, and benefit from a full suite of financial services that they need to achieve financial stability, resilience, and long-term financial security. And so what you'll see in this metrics dashboard is these three key concepts reflected in the measurements that we're displaying here. One is that access, not just access, but benefits. So we recognize that financial access is necessary, but in of itself is an inadequate measure of whether the financial system is helping real everyday people with their financial needs. That second part is that full suite of financial products and services that people need, ranging from banking and payments to savings and investing and insurance. And that third part is the totality of the financial system. What are the important household financial outcomes that the financial system enables? So what are the North Star measures around stability, resilience, wealth, and financial well-being and security that the financial system enables? So without further ado, just how inclusive is the US financial system? And I'm going to share my screen here. Just give me one moment. Great. So we're going to start with this part of the dashboard, the metrics dashboard, which shares the more proximate measures of access, use, and benefits that a person in their interactions with the financial system may experience. So what you see here are the three measures: access, use, and benefits on top, and then the types of financial services and products that a person needs over the course of their life, ranging from banking to savings and investing, credit, and insurance. The colors here denote progress. So you can see the areas in green in which we've made progress over the years, yellow in terms of where progress has been flat, and then red even where things have declined in the most recent years. And what you see here is in some areas, the financial system is actually performing really well, but in other areas, it isn't. And so progress has been uneven. And to make that more tangible and give some examples, within banking and payments, for example, we've seen access and use relatively high measures, and those have been increasing over time. So now over 95% of Americans have a transaction account. The percentage of households considered fully banked, meaning that they're able to use their bank account for all the services they need without turning to alternative providers, are at all-time highs. However, when you look at the benefits column, what people are paying for to access and to use banking services has increased. So it isn't just a rosy picture if you look at access and use, but is that a warning sign even within the progress that we're making here within banking and payments? In the other categories here of the financial system around short-term savings and long-term investing, we see a lot of flat. So things have remained pretty consistent actually over time. About half of Americans use a savings account, about 2/3 have access to retirement benefits. Ultimately, whether that financial access translates into the outcomes that we want is where we measure use and beneficial. So it's about half of Americans, a little bit less, report that they have the income in emergency savings to withstand a shock. And it's about half as well who are on track to be able to retire with sufficient income. Where things, I think, show some more sustained progress is actually in the credit category. We see about a little over half of Americans have a prime credit score, meaning they can access affordable credit products. That's a proxy for that, and that's been increasing and trending up over time. We've seen leverage for households remain stable or even decline in the last decade after the financial crisis. And that's translated into about 3/4 of households who indicate that they have a manageable amount of debt or no debt. So these are the very proximate measures that we view kind of to encapsulate and to illustrate just how on a financial product level, what are people's real experiences with financial products. Ultimately, what matters is how does this translate into the ultimate household financial outcomes that we want to enable? So just how are we doing as it relates to these more higher level goals that the financial system ought to lead to? So in terms of financial well-being, this ultimate North Star, it's about 2/5 of Americans indicate high or very high financial well-being. And that's a direct result of whether they're experiencing financial stability, resilience, and wealth, which their experiences in turn with banking and payments, for example, with savings, are the financial products that lead up to these measures. So give or take, it's about half of Americans who report that they have financial stability and financial resilience. So they report routinely positive cash flow, for example, or they indicate from the World Bank Index, which is the financial resilience measure here, that they're able to weather a simultaneous drop in income or an unavoidable expense. And then ultimately, if you have stability and resilience, you can build wealth. So the median net worth of the bottom half of US households is about $12,000. And these three things together ultimately inform just, how does a person going about their day-to-day, do they feel that they have high levels of financial well-being and they can manage their day-to-day needs as well as planning for the future? So Kate, that is how we are doing in terms of the financial system. Back over to you.
Great, thanks. And just a question for clarification, so we don't lose that. We did see some color shading there around green, yellow, red that were about the trend lines. Is there anything to say about target percentages yet in terms of how this dashboard might be used?
I think in terms of forming a national strategy, targets are very helpful to have a concerted action across stakeholders to understand what are the goals, what do we think are achievable. In this metrics dashboard itself, this just denotes as is progress over the years. And so you see that green shading for progress, positive progress, yellow for flat, red for things that are trending down. So I think by seeing the holistic picture, we are able to make targeted and identified areas for improvement. And that's, to your earlier point, Kate, why a national strategy for financial inclusion is so important, so that we can identify where the gaps are, where we see persistent uneven progress or disparities, and really, rally the stakeholders in the government and the private sector and the social sector around what we think the gains could be.
Yeah, that's great. Thank you. Questions are rolling in and we will get to them, but I want to pull in Delicia and Nancy to the conversation because I think you both have, some really interesting insights to share. I'm going to start with you, Delicia. First of all, I would love for you to tell our audience both a little bit about, who is Consumer Reports, for those who may not be familiar, but in particular, really the groundbreaking work that you're leading around actually assessing, if you will, the types of digital financial products that we have access to here in the United States.
Sure. Thank you so much. And good morning, good afternoon, and evening, everyone. Consumer Reports is an organization that's existed for over 80 years and ensuring that consumers are safe in the marketplace of products and services. So we are best known in the US as the organization that test products and then rates them, mostly, I would say, in the household product space. So from your basic appliances, refrigerators and stoves, to daily usage things like bicycles, bike helmets, cribs, etc. So we have a large facility in Yonkers, New York, where we do all kinds of testing. And over the years, we have evolved that to also begin to engage online marketplaces, online or digital products, such as health apps or other kinds of connected devices. And most recently, and this is the work that I lead, testing digital finance products. So these are things like payment apps, peer-to-peer payment apps, online or digitized lending products such as buy now, pay later, which you can now leverage and use through apps, mobile banking apps, credit scoring apps. And we have developed a framework. I'll say more about this later. So this is what we're doing, and we have approached that through a principle-based approach where we evaluate on these various principles, among which inclusivity is one of them. So this is what we're doing in this space, and we're learning a lot.
And it's been, I think, enormously interesting to see both the analysis that you've been able to put out so far, and how the market and consumers are both reacting to that. So we'd love to dive into that a little bit. Before we do that, I want to make sure we've got, I think, also a really interesting perspective here with Nancy. I know, so between us looking at metrics around what is the inclusivity of our financial system here in the United States, we have an organization like Consumer Reports helping us to do really important work on rating essentially the quality of our financial products. How's that landing with you as you look across a set of trends happening internationally in a number of other countries, and the work that you've done to help set up similar programs?
Sure, thank you so much, Kate, and hello everyone. Great to be joining this wonderful panel here today. So maybe Kate, maybe I'll just provide just a brief context about the work of my office, the Office of the UNSGSA. So I'm a policy advisor at the Office of the UN Secretary General Special Advocate for Inclusive Finance for Development, Her Majesty Queen Maxima of the Netherlands. Next year will actually be Her Majesty's 15th year as the Special Advocate. So she's been on the road for a while in terms of advocating really on financial inclusion. I would say the past decade, the work of Her Majesty has really been focused on really ensuring access to financial services, especially in emerging markets where inclusion level was very low. And I think we've been very happy with the progress that we've seen so far. Also, from the World Bank Global Financial Inclusion Index that has been consistently measuring the progress of financial inclusion around the world. I think we're very happy that over the last decade, I think we've included over an additional quarter of adults in the world into the formal financial system. So I think we're very happy there. But as per Mac's very, very interesting presentation just now, I think in emerging markets and in markets where we have seen a lot of progress in terms of inclusion, it's really time for us to actually apply what we call the financial health lens, which is very much similar to the terms that you are using around financial outcome. So for us, sure, there has been a lot of, again, like great improvement in inclusion, but sometimes we forget because we've been so focused on ensuring access. Sometimes we forget on what that means actually. So what you were explaining, Mac, about the comprehensiveness of a suite of products that are available out there, and also the affordability and the suitability for people to help them manage their day-to-day expenses, make sure that they can serve long-term goals, make sure that they can be financially resilient against shocks, and also be less financially stressed about their lives is something that's very important. And that is something that we feel we need as a financial inclusion sector. We need to be more intentional about that. We have seen, again, a lot of uptake in terms of just account, but we've seen a lot of that progress still revolves around payments and around actually consumer credit. In terms of real tools that would really help people with their financial health and financial outcome, such as savings and insurance, there's plenty of work that needs to be done. So I think when we actually learn about the matrix that Mac and team developed, we were very happy to see that, and something that we might actually steal and apply for global context as well, because that it's a simple framework, but it really reminded us like that inclusion does not stop at just having an account, having a mobile wallet, and so on, but what are the other tools that are still missing, and also what's the quality around those tools. So yeah, I think we are learning a lot, and especially when we are now talking about financial health and financial outcomes. The U.S. is really one of the markets where we are trying to learn a lot about, because it's really one of the markets where we've seen a lot of great innovations from the financial institutions, but also from the policymakers on what needs to be done. So I'll just stop there first.
Wonderful. Thank you so much. I am so excited for this rich dialogue we can have, but you've brought up the great thinking of our U.S. policymakers. And so I'm going to take a few minutes here with one of our very own. So Nancy, Delisi, and Mac, I'm going to ask you to shut off your cameras for just a few minutes while we have a conversation with Susanna. I know we've only got her for a short period of time, and so really want to make the most of it. Hi, Susanna, and welcome. It's great to have you. It's great to have you here today. And first of all, I would just want to say, tell us a little bit, both about your role at the U.S. Treasury Department and what you may be working on when it comes to a national financial inclusion strategy.
Thanks, Kate. And let me first just say how pleased I am at the chance to join all of you and to hear from such an expert group of panelists. That's a treat on a Thursday morning. So I lead a team at Treasury focused on consumer policy and access to credit and capital. We lead Treasury's work on household finance and financial inclusion, and generally are responsible for producing policy analysis on developments in financial services that impact consumers. So that includes emerging products and services, payments, credit, financial technology, and a variety of related topics. And we also coordinate and manage the Financial Literacy and Education Commission, which is an interagency body chaired by the Secretary of the Treasury and dedicated to advancing financial well-being, specifically through financial education and financial literacy efforts. So as this group knows extremely well, access to financial information and tools that consumers need to meet their financial needs and goals is really critical to advancing household financial security and also to efforts to close the racial wealth gap, which has been a priority for Secretary Yellen and certainly for the Biden-Harris administration. Last year, Congress directed Treasury to develop a national strategy on financial inclusion. And I'll note, Treasury has, of course, had a significant amount of work contemplating and advancing financial inclusion prior to this tasking. We released a report last year on consumer activities and risks related to digital assets. More recently, we published an analysis on household financial impacts of climate change. But this strategy is really an opportunity for Treasury to advance a strategic vision for financial inclusion and to produce a roadmap for future action, both within and I think outside the building. We're very committed that we produce this with rigorous outreach and engagement. So as part of this, we're engaging with stakeholders from various parts of the financial ecosystem, talking about the appropriate definition, scope, measurement of financial inclusion, and of course, the role that ecosystem participants can play in advancing inclusion. That engagement is taking place principally over this fall, with a request for information towards the end of the year to ensure we really have substantive opportunities for public comment. And I'd encourage, those folks who are listening, who think that their organizations would have a perspective to share, to keep an eye on that. Because the engagement is ongoing, I think it'd be premature for me to be able to say much, more substantively about the strategy. But of course, kind of some key features that have appeared in the tasking include really clear objectives for financial inclusion, benchmarks for tracking progress, and then recommendations for a range of actors as well as certain technologies to further promote financial inclusion.
That's helpful, Susanna, and it's exciting to hear both this commitment to this work that the Treasury Department is making, but also just more broadly the longstanding work that's been happening to advance these issues. And I'm curious, I know it's premature to say what's the strategy ultimately shapes up to be, and really appreciate the way that you're really gathering stakeholder feedback and input at the moment. Are there certain, guiding principles that you think are important to the strategy writing process? And we've already, talked a little bit today about the role of having an outcomes focus. Mm-hmm. How do you see that sort of shaping the way that you think about writing that strategy?
So our goal is that the strategy is valuable for consumers and for all market participants. Certainly that it provides clear and actionable opportunities to enhance financial inclusion. And that's, why my team and I have put such an emphasis on outreach and listening as we're in kind of the first phase of this work. We're committed that this is an equity-focused strategy, one that, of course, contemplates and works to benefit all consumers, but is critically focused on ways that we can reduce disparities. And, as you point out, we also believe it's very important that we link near-term goals around facilitating access to longer-term outcomes related to consumer financial health and economic opportunity. That also, connects obviously very strongly with the broader Treasury mission around advancing equitable growth and economic opportunity. So since the beginning of our conversations with market participants and community stakeholders, it's clear there's not a single agreed upon definition for financial inclusion. There are a variety of terms that we use to describe work in this space, financial well-being, financial capability, and those varying terms and definitions can also suggest varying goals and outcomes. Many of you are familiar with some of the United States statistics around banked and unbanked households. And of course, we see this strategy as an opportunity to help promote options for consumers who are unbanked and underbanked. It's a key priority, especially as the financial system grows more and more digital. But of course, we also think about financial inclusion in terms of consumers' ability to save, to access credit, and even through more qualitative measures of how consumers feel about their finances and about achieving their financial goals. So those are outcomes that may look different for different households. They may evolve over time. I'll mention, we are trying to ground our work in respect for consumer agency and the recognition that it's important to create financial infrastructure that facilitates meeting financial needs, as well as reaching self-directed financial goals, as all of us should have the opportunity to do. And then, I'll kind of bring us back, I think, on a process note, just that the overriding principle that is shaping this is that we believe our role is to listen and engage very deeply with sector participants, with consumers, with many of the folks who've been leading and, kind of at the tip of the spear on this work for a long time. So the opportunity to hear from colleagues like those in this panel is useful. And I think there are going to be a range of opportunities for us to do that as we continue the work.
That's helpful. Thank you. Thank you. And I'm thinking you're in the listening part of the phase of the work at the moment. There'll be a strategy drafting phase and ultimately kind of coming out with a final strategy. Looking ahead, what does Treasury really see as next steps once a strategy is drafted?
Yeah. So Treasury and the administration more broadly have a number of priorities that are focused on enhancing financial inclusion outcomes, including through, fairly direct resources and support to underserved communities, and also work to catalyze problem-solving efforts across the public sector and the private sector. We certainly see the strategy as a piece of that agenda. We recognize also the ways in which there are some unique contours to this problem. So compared to other jurisdictions, including many of those that have formalized financial inclusion strategies, the United States has a highly developed and sophisticated financial system, including a robust payment system with a wide range of analog and digital payments and credit products that are available. So in many ways, the financial infrastructure here exists. It certainly continues to evolve through new technology, the emergence of systems like FedNow. But we see this work as principally a matter of creating opportunities, better opportunities to bridge the gaps that exist. And while this strategy is necessarily going to be a high-level document, we also anticipate that it's going to generate a significant to-do list, helping to shape our agenda at Treasury moving forward, as well as the ways that we can engage and partner with the interagency, including financial regulators, as well as the broader ecosystem. So we think this will provide us with, the opportunity to think critically about an overall vision, as well as the many more granular elements of how we work towards that.
Thank you for that. I appreciate that. And it's an exciting path forward that we have. And we are grateful for your leadership and for those of your colleagues. I think that might be all the time we have with you today. And I appreciate you taking some time out of the work that you're doing to be with us. Thank you, Susanna.
Great to be here. Thank you. Thanks for having me.
Great. Nancy, Delicia, and Matt, can I get you back, please? Great. Hi, everybody. So there's some exciting things happening here in the United States to move forward on this agenda. And I'm just principally curious, after listening to what Susanna shared about their process and the journey that they're on, what your reactions are to what's happening there. And Nancy, I'm going to throw it over to you first, as sort of kind of looking across what's happening across a number of countries, how that lands with you, what you think about that.
Yes, so no, I think it was really great to hear Susanna's plan, the Treasury's plan around the strategy, because I think that is also what we are actually seeing in a lot of countries that we are engaging with around the world. For example, we have been providing some advice to the Reserve Bank of Fiji, the Central Bank of Tanzania, also the Central Bank of the Philippines, to also kind of bring in some of these questions and the dimensions around financial health and financial outcomes into their updated financial inclusion strategies. So I think, as Susanna rightly mentioned, the U.S. has a much more developed financial infrastructure per se, but we are seeing in a lot of emerging markets through the use of technology and digital public infrastructure and so on, a lot of the countries are actually leapfrogging some of like the milestones as well, right? We were just in Brazil in June, and it was so fascinating to see just the instant payments infrastructure that they have there, and the way that most of the economies is being digitized in Brazil, for example. So there's a lot of then kind of like immediate catching up that policymakers around the world actually needs doing as well. I think maybe just to give you maybe a brief example and to illustrate this a little bit further is what if we look at Kenya, I think you probably are familiar with the story of Kenya and how it's really one of the poster child of successful financial inclusion for very, very legitimate reasons. I think through the use of the mobile money M-Pesa, for example, now they have over 84% of the adult population formally included, meaning having a formal bank account, right? But it's really interesting that for the past couple of years, the Central Bank of Kenya then also took the initiative to measure financial health, similar to what we've been doing here in the US through the work of the Financial Health Network, for example. And they found that as financial inclusion advances, financial health levels are actually declining. So that's really interesting. And so if you look into, again, the situation in Kenya a little bit deeper, you will see that, again, there's a lot of usage around payments, but there's been a lot of increase with regards to nano digital credit. So very, very small value credit that you can easily apply from your mobile apps. Again, thanks to the ease of mobile money. But that actually has been a major pain as well in the recent years, because that is now leading to over-indebtedness, for example. So again, I think it is very timely for a lot of regulators, but all and also private sector leaders to actually really have to be more intentional in terms of looking at financial outcomes with regard to the whole inclusive financial system.
Yeah, Nancy, that's fascinating. I really appreciate you kind of bringing that story in, especially, so many of us here in the United States have, heard bits and pieces about the success story of Kenya, and it's really interesting to see how that kind of focus on what's happening for families shows that it's an ongoing story, really.
Mm-hmm.
Delicia, I'm curious, your reflections on sort of what's happening here in the United States, particularly as you're doing such powerful and important work around the provision of specific financial services, your reactions to this happening and how that influences what you're working on.
Yeah, sure. I mean, one of the things that comes up for me in both what Nancy and Suzanne said, talked about, is that it's not enough to say that we're just providing more access to consumers to products, but really we need to move the bar for how we define inclusion and have that outcomes focus. Are consumers accessing quality financial services that actually help them, right? And I think we're hearing from Nancy is that there are some proof points, and I think that's what we're also seeing in our work that demonstrate that consumers, that beyond being able to access certain products and services, that we have to then look at the conditions created. What is the product environment? What are the ways in which financial service providers are actually helping consumers to be able to achieve certain goals? So is the product environment set up such that consumers can be successful? And these are concrete things like, are the terms and conditions for products and services fair? Are they easy to understand? What steps do companies take to prevent consumers from being overextended and managing debt and on-ramping them to build their credit? What we're seeing in our examinations is that there are a now rich set of tools and techniques that are being used to deliver products to consumers, but there is a lot of room for improvement in terms of ensuring that that dynamic design now attaches to very specific outcome-based financial inclusion and well-being goals. So in the same way that companies may be using push notifications or gamifying certain elements of the user interaction to deliver a product or to ensure that a consumer uses a service successfully, can these techniques be used to also be leveraged towards goals that situate a consumer towards developing improve financial health or well-being outcomes? So these are some of the things that we look for. We look for the presence of some things, but then also, frankly, the absence of some things that may also be detrimental to consumers. So we look for the absence of what we call deceptive design, where companies leverage behavioral analytics from all the data that's being collected through use of these apps, and are there the absence of certain pushes and pushes of information or pushes prompts for consumers to take actions to enroll themselves in higher cost product offerings and services. So those are some of the things that come to mind, which is moving not just from access, but to quality, improved quality financial services that actually situate consumers and give them the best chance, frankly, to weather financial instability or to ensure that the product actually works for them. We see an increased use of the language of financial well-being across products. So different kinds of products are now being marketed as ways for consumer to achieve financial health, to manage through financial stresses. So some of the things that we're examining for is to see, well, do the claims match up to the experience of the consumers and the certain conditions in the product environment to facilitate that?
Oh, that's fascinating. I'm sure I've lots to dive into on that, but before we get back to that, you're bringing up, I think, a really important point, and Susanna also raised this in terms of we use a lot of terms. Conceptually, I think we're very well aligned, but it can, in practice, mean people are kind of interpreting these things in different ways. You know, Mac, having both been in this work for so many years and through the work of developing this dashboard, what comes to mind for you in terms of this outcomes focus and this clarity around definitional focus, and how that leads to both things at a national strategy level and around product?
Yeah, for sure. Well, there was a lot to love in the approach that Susanna shared from Treasury around that financial outcomes focus. So within the dashboard that we used, we interviewed, experts in the United States, globally, and we used publicly available data related to that. And a few reactions to what was shared. One is just that it's so amazing to hear that the United States will join over 50 countries that do have a national inclusion strategy. Empirically, we see that countries that have one make more sustained progress over time than countries that don't. And I so loved the equity lens to which Treasury is going about their work. So something that I found fascinating in developing the metrics dashboard is for every single measure, you find persistent disparities that exist for low and moderate income households, for example, rural communities, racial and ethnic minorities. So really, centering, and this is building on what Nancy and Delicia shared, really centering like who is an inclusive financial system for? It's really for these populations in particular that experience and have experienced persistent disparities. So those are some of my top of mind reactions in hearing that, and I think it really builds nicely on the work that we've been on and the journey we've been on these last few years.
Definitely. Delicia, since you put out the framework, and there's so much other work kind of we're hearing about to come on really placing a marker on outcomes. I'm really kind of curious sort of how the market's responded. How have providers who've been rated responded to the criteria you use? What's that conversation been like, and what's your hope for the future based on that?
Sure. I mean, I would describe the response so far as overwhelmingly positive. We've gotten really good feedback on the evaluation criteria that we're using, both feedback that indicates that these are metrics that seem to be appropriate for the current marketplace, the products that are out there, all of the complexities of the environmental constraints, whether those be, consumer concerns or issues, or, the challenges of meeting a very complex regulatory landscape. And we've also received useful feedback about the kinds of things that, the kinds of ways in which we could leverage various methodologies, product testing, consumer research, et cetera, to get better information. We've been incredibly surprised. The marketplace has been responsive, and even with what we've been fairly transparent about, which is an iterative process, we envision that we will continue to evolve the framework and try to meet the market where it's at and continue to try to refresh. But for the product areas that we have evaluated so far, payments, buy now, pay later, we're in the middle of engaging with banking providers for our evaluation of mobile banking apps. The providers have been very responsive. We have identified opportunities for improvement across the board. The CFPB earlier this year, for example, replicated one of the components of our peer-to-peer evaluation and reach the same finding, for example, that consumers' funds are not sufficiently protected and when they're held in these peer-to-peer accounts, and that there's more to be done by companies to make it really clear to consumers how they can move their funds to in either an insured account or connect their accounts. And so we're seeing some really good proof points in that regulators have validated our research and our findings. The CFPB subsequently issued a consumer advisory and also put out guidance to companies. And then behind the scenes, part of our methodology before we even publish is engaging with the companies we evaluate to share the findings. And so far, we have identified things, simple and complex, that companies have been responsive to, that we think are improvements to the end products that reach consumers. So we've reached agreements with companies to do things as simple as using clearer and simpler language to optimize their searches, such that even if they don't have very dynamic features, it's easier for consumers to actually find something in the app environment. And so these are some of the small wins that we're celebrating in terms of our ability to identify areas for improvement and the receptivity that we're receiving when we engage with companies.
That's a really powerful story of impact, though, in terms of not only what's happening in the dialogue that you're having with providers, but how that has then led to a really robust regulatory conversation. So just, I mean, hats off to you. That's amazing.
Yeah.
I'm going to turn to questions from the audience in just a minute, with some rolling in, but just to let everybody know, send them in, we're taking a look. But I'm wondering too, Nancy, one of the dialogues we've been having a little bit here in the United States is, do regulators really have a mandate around financial outcomes for households? Certainly there are mandates around the safety and soundness of the financial system that are critically important. And I'm curious your viewpoint on that, and what you've seen in terms of the role of social sector actors in sort of highlighting the regulatory role in delivering on financial outcomes for households.
Yes, Kate. So I would say maybe, in terms of mandate, it might differ from one institution to another. But in terms of interest, we are seeing real interest in terms of, again, applying this financial outcome lens for obvious reasons. A financially healthy consumer base makes central banks work so much easier. And I think what's been really interesting is we've been seeing different policy responses per se on in terms of what this means. Maybe coming back to Brazil, they have been one of the most interesting examples that we've seen as well in terms of steps taken with regard to financial health or financial outcomes. So the Central Bank of Brazil actually has taken a more kind of industry engagement approach towards this whole lens. Is, for example, they administer an annual financial health survey for Brazilians, working together with the Federation of Banks in Brazil. So that's, again, an industry and kind of regulator collaboration specifically to take a pulse on the level of financial health in Brazil. And adding to that is they use the insights from the survey report to actually then convene working groups and convene very dedicated engagement with the banks and also the fintech associations and so on, to really talk about, okay, so what does this mean? Maybe one interesting example is the Central Bank of Brazil did also a survey, for example, around different practices with regard to credit card statements in Brazil, and have a discussion with the industry on what this means with regards to Brazilians' financial health. So credit card indebtedness is a serious issue in Brazil, and it's an issue that is becoming more and more pervasive. So they found, for example, this is actually, I think, pretty similar in the US as well. And the Financial Health Network actually has a great publication around designing credit card statements or credit cards for financial health, which I think globally the trend is, for example, when you get your credit card statement, you are presented with the option to pay your minimum amount first. And that, I think, what the Financial Health Network calls as an anchoring effect. So you have a $1,000 credit card debt, right? And you're like, oh, actually, this month I only have to pay $100. I will just do that without actually processing and giving it maybe a clear thought on what this means in terms of interest rate and so on. So again, it's a similar case in Brazil, and I think they also found that a lot of Brazilians don't really comprehend what APR means, for example. So, like, what can the industry do to make that clear? Maybe instead of using an APR, like when you present your client with a credit card statement, maybe provide just the nominal fees and the nominal interest rate that will apply. And again, I think this is what we're really seeing as interesting from the financial services providers. Like, we're seeing a lot of fintechs and a lot of challenger banks and so on coming up with a different spin on this. So the way they differentiate themselves is to come up with again, kind of sort of better options with regard to credit cards and so on, that is more friendly, that is more easier to consume for their clients, and make that as a key selling point. So just for us, that is something that's exciting. With regard to what we're trying to support with policymakers around the world, is to bring in, again, examples from the US and from around the world on what has been done. I think across the world, I can say everyone's universally challenged with regards to building emergency savings. And the notion is always, oh, if you're poor, you can't save anyway, so it's a moot point. But we are, for example, trying to bring in a lot of the great work that the US has been doing in terms of emergency savings initiatives, and see whether some of them can be actually transferable to countries like Kenya, countries like Brazil, countries like Indonesia, for example. So that's where we've been focusing in terms of support for regulators.
That's fascinating. It brings up for me also this interesting, I don't think it's a tension, but it's a sort of need to kind of think about some things in parallel, which is around what are product features, product characteristics, ways that we help to build a more inclusive product design and set of user experiences. Alongside, we're talking about the financial system, and it is a key piece of infrastructure. And as we think about national strategies and the balance of things that it needs to focus on, that there's sort of perhaps the need for a healthy mix of both. Mac and Delicia, you've both been involved with Aspen on a working group that we've convened on inclusive finance, kind of looking at what are some key priorities or unlocks to our financial system. And that work has really, I think, produced some more infrastructure related conversations that I think are really interesting. Do either of you care to comment on that balance between products and systems, if you will?
So I think you hit the nail on the head, and one of my reactions actually from Susanna's presentation is that the strategy is very balanced, the approach that they're going through, balancing infrastructure and working with market participants, as well as she used words like financial agency and financial capabilities, so really about people's direct experiences with financial products. And I think something that's interesting about the working group and really what are the core focal areas that we believe a national strategy could make the most progress on? Two system related ones. One is, in the metrics dashboard I presented, about half of Americans have a prime credit score, but a prime credit score is only a proxy to being able to access an affordable financial or credit product. So something that's top of mind is, how do we reimagine underwriting as a system, for example, to truly score people and assess their risk level for where they are, not necessarily what their credit score and the inherent biases that contains may contain. So that's one example of a systems level problem that has implications then for individual financial providers and households.
Yeah, I think I would agree with that. I would also say kind of one of the things that's important is to look at the marketplace, and is it and I think competition comes to mind. And how does competition play a role in setting a consumer up to be success? And here in the U.S., we've been focused a lot on open banking and competition rulemaking, which maybe making its debut as we speak.
While we've been on this webinar, it's just live now.
Exactly. So it is live now, but I think that's also incredibly important. It has been costly for consumers to manage basic things like trying to move from financial institution. So I think also having that systems look is very important, because there are many structural barriers, systemic barriers, which exist. And I think competition is one of those key issues. Can consumers move easily without a significant cost? Do they have access and meaningful control over their own data? One of the things that we look at is how financial apps and financial products and services help a consumer to do that. And there is a lot of room for improvement there. The more information that's out there, the more security risk that creates for a consumer, and particularly for vulnerable consumers, then that's something that can be improved. So I do think one of the areas identified, which is that systemic look, the marketplace, competition, is also important.
Thank you for that. So for anybody who didn't know what we were talking about, our Consumer Financial Protection Bureau has just dropped its proposed rulemaking for open finance. Happy 1033 Day to those who celebrate. One other kind of element here that's critically important is how are we also in the context of all of this sort of looking ahead to the sort of frontier edge of finance? And an interesting comment or question has arisen here about how are we looking at things like cryptocurrencies as speculative investments. We're talking about investment and wealth building as a part of these frameworks. How could that factor into the way that we've looked at outcomes? Mac, I know you've been doing some work on the crypto space, and I'm curious whether that weighed into how we thought about the dashboard.
Absolutely. And actually, there's a blog post that recently went live that describes 10 real use cases on how blockchain and crypto could impact inclusion and wealth building. I'll drop the URL here, and hopefully that can make it over to SwapCard as well. But the short of it is, I think we have overly indexed as thinking about crypto as an investable asset, and the jury's still out with the boom bust cycles in terms of price. But there are other use cases in which we could see implications really on how in the background people experience financial products across banking and payments and short-term savings. So I really view it as embedded within that framework of what we shared. And just a simple example, stable coins. Like those could be in the future a really important way in which people around the world that live in countries with fragile currencies actually build micro savings. So I think there are implications here for financial inclusion and wealth building, but the jury's still out. And I don't think it's a sixth line or row, but something that's truly embedded within that framework.
Thank you. All right, lightning round in our last 90 seconds. What is your key final message to this audience on building a more inclusive financial system? Nancy, I'm going to start with you.
Sure. I think for me, again, just having the discipline to really look at financial inclusion and inclusive financial efforts from really the lens of how is this going to impact the financial health of customers is really key for us. I think just briefly, it was really interesting when I was listening into a conversation between the acting comptroller of the U.S., Michael Hsu, with Her Majesty. And what the acting comptroller was saying is a lot of financial products are, it's very difficult to categorize them as black or white. Taking the example buy now, pay later, it might be really helpful for an individual in terms of managing some of their expenses, but it could also lead to indebtedness. So I would just say, again, applying financial health outcome would really be meaningful in terms of really moving this space in the right direction.
Okay, lightning round, Delicia.
Gosh, I would say that there's a lot that companies can do to actually situate consumers in the best way possible to achieve their desired financial outcomes. So I often say, particularly for startups, you know, it's worth making that investment. We often see a trade-off between just putting a product out there and using all this cool technology, but then not using it in some of those key ways, providing information, managing a consumer's footprint. So that is a way, in our view, that you can actually achieve a win-win, right? If you can use these really interesting and tech-forward techniques to deliver good products, you can also use these same techniques to ensure consumers are successful on the journey.
10 seconds, Mac.
Ask yourself, how is your financial system performing, and see if you can create your own version of that metrics dashboard. That was all publicly available data.
Great. Thank you so much, Nancy, Delicia, Mac. I am so excited about this conversation and continuing learning from you. And thanks so much to the Center for Financial Inclusion for hosting this.
Thank you.
Pleasure. Thank you, everyone.